Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton, and as you can see, Ron Maiellaro is not with me. Either that or he has transformed himself into Jade Walle. Good. Greetings, Jade. Ron is kind of under the weather, so we appreciate you jumping up here to sub for him on a last-minute notice.
Yep, I'm glad to do it. And just let me know when you need my address to send me the $1 million check for the guest appearance.
I'll refer you to my CPA for that, and we'll see if we can take that under consideration. But you've seen enough of these things to know how they work. We have an outline, but we don't have a script. So just feel free to jump in with any kind of commentary or observation as we go along. And of course, you know, the first thing we do, Congress.gov, my favorite part of the segment. We have got some stuff to get in here today. I mean, some of the things that we highlight here on Congress.gov is just because they're so totally ridiculous. The definition of municipal solid waste, for one, and some of them are filed under, what the heck is that doing in the tax code? But this one, the first one we've come across today, I think is really scary, Jane. I'd love to have your input on this one. This is a bill, HR 4962, to amend the Internal Revenue Code to provide that the stock of certain corporations is eligible for capital gains rates only if such corporations maintain a plan for distributing equity to employees and for other purposes. Of course, that's all predicated on the fact that the capital gains are taxed at a lower rate than regular income. And this is basically saying, if you invest in a company whose practices we don't like, we're going to tax any investment income you get from capital gains on that at regular rates. It's trying to force companies to do. I can imagine the nightmare, the can of worms that would open for your colleagues that are in the tax line of service on CPAs. Go.
Yeah, no, absolutely right. I think our tax colleagues, unfortunately, with accounting firms around the country, don't mind these type of nebulous rules because it gives them more opportunities to consult and help companies navigate the complexity. Now, that doesn't make it right. And as a matter of fact, I think if we really boil it down in our heart of hearts, we'd say that's not right at all. That's wrong, that we should be trying to manipulate and encourage various behaviors, right or wrong, with the tax code. And I go back to, Bob, you and I have talked about it. We've gone to the moon, invented automobiles, submarines, electricity, and air flight. And I don't think the tax code was used in any of those examples to help us get to those goals.
Oh, yeah, but I tell you what, what would happen also if a particular corporation under this thing, and there's no text here, we can't dig into it and see what it says, but suppose that as of January 1st, the company was on the bad list, it didn't have the plan, it got approved in July, you sold some of their stock in November. I mean, what portion of your capital gain there is taxed at regular income, at the capital gains rates? I mean, you can't really tell. But
it's a bag of worms. And again, the accounting firms are happy to help you navigate and try to, get opinions one way or the other. But that is a mess. And you've said this many times, as well as Ron Maiellaro, businesses crave stability. They want to be able to plan and make capital expenditure decisions, investment decisions, R&D decisions. And when the rules are always changing, it really makes it tough on businesses, and many of them fail. And it's not in a small part due to this IRS melee and just mess.
Okay, I imagine we could deal with this one all day, but let's go ahead and move on a little bit. This is HR 4940 to amend the Internal Revenue Code to impose a tax on real profits of certain corporations. That's, really specific, is it not? And HR 4932. This is to amend the Internal Revenue Code to provide an additional deduction for the cost of certain materials purchased directly from a domestic smelter or processor. That's just one of those, what is that crazy thing doing in the tax code?
Well, and Bob, I'm getting my representative. We're going to propose HR 5213 to help the IRS code define domestic smelter. So look for that.
Oh, okay. We will do that. And this is another one that just made me laugh when I looked at it. HR 4902 to amend the Internal Revenue Code of 1986 to treat diapers as qualified medical expenses and to prohibit states and local governments from imposing a tax on the retail sale of diapers. Of course, that only comes into play if you're in the 10% of people who itemize deductions, right?
Right, right. That's crazy.
Yeah.
Do adult diapers fall into that, Bob?
I say again, these things don't have the text in them. We look at them from date of introduction, newest to oldest. It takes a few days to get the text in there. I would assume that it would, but it says diapers are qualified medical expenses. So
Wow.
whatever that does. One more kinky one here that we need to get to, and that is HR 4817 to amend the Internal Revenue Code to provide a credit for previously owned qualified plug-in electric drive motor vehicles. You used to be able to get a tax credit when you buy one of those things new. Now it looks like if this becomes law, you will get a tax credit for buying one used.
Wow. Wow.
And if you buy the used one, no fair tax, by the way.
That's right. That's right. Did you mention the totals already for this Congress? Like what the proposals, the numbers are up to?
Oh, you're right. We didn't do that. What we normally do, we go to congress.gov. You put in the little search bar right at the beginning the words Internal Revenue Code in quotes. So you're searching on that whole string. Look at the filters on the left to make sure you're ticking just legislation in the 117th Congress. And as of today, when we're recording this, that search brings back 1,131 hits. I think it was like 1,042 a couple of weeks ago, last time we looked. But yeah, now the Congress critters are back full strength, proposing changes to the tax code.
Wow.
Okay. All right. Well, I'll tell you what. Let's move on to the meat and potatoes of what we really wanted to talk about. You watched last week's show, I assume, about
Yes.
what happens if. Now, I was actually visiting my brother in Alabama at that time. He knows that I do this podcast, but he'd never really watched one before. But he was watching over my shoulder last week as this thing was streaming, and I was trying to answer things in the comments. And we were dealing with that, what happens if the sunset clause gets triggered because the 16th Amendment's not repealed. And then we were asking people to bring in their own what happens if. And of course, that invitation still stands. We'd still love to have people who have these what happens if scenarios send them in to us at the fairtaxguys@gmail.com, and we'll try to deal with them. But this is one that I thought was pretty cool. My brother looked at me and says, all right, well, what happens if a retail consumer here in the United States goes online and purchases goods directly from a foreign-based vendor so that there is no American vendor involved in this at all? Is that a way that people can evade the fair tax? And of course, we've always kind of poo-pooed the idea of a huge black market springing up to help people evade the fair tax. But if you could get away with that, I thought at first that he had found a really big loophole.
Yeah, I don't think so. I'm interested because, Bob, I know you've talked to Steve Hayes, our president of the Americans for Fair Taxation group, the grassroots organization that created the fair tax, and I'm interested in his take, but I'll give you mine first. Okay. Now, when we travel internationally and you come back into the States, they hand out these slips to you on the airplane. Like, what did you buy abroad and what are you bringing back in? And the purpose of that is for the American government to determine if you bought so much that they want to charge you a customs tax as you come across on the border, kind of like a use tax, if you will, because you're bringing value into the U.S. that escaped U.S. taxation. Now they give you some de minimis amount. I don't know what it is, $500 or $1,000, and you fill out what you bought, and then you hand it to the guy, and they stamp you and let you back into the country. Now the reason for that, and what I think would happen if you buy, let's say I buy a car, and I've had a friend do this. Like, I want to buy a car directly from Sweden. I think the Volvos are made in Sweden, and I want to buy my Volvo and have it shipped over on ocean freight, and I'm buying it directly. But when you do that, when you do large purchases, you have to go through a customs process. And the way I understand the fair tax, and again, I call this on the fringes, right? The majority of expenditures aren't going to happen this way. But if you happen to want to buy a lot of foreign goods from some kind of online source, dark web, or just normally, like you're buying a Volvo from Sweden, you will have to, the fair tax would be enforced at the customs when you receive your goods at that moment, the way I understand it. Bob, and I don't know if Steve had a similar perspective.
Well, actually, you nailed Steve's response pretty well. Let me read this from you. He says, if a person purchases something overseas that must be imported through customs, then the fair tax would be collected there. Like today, many people purchase things on eBay and other outlets and have them shipped from overseas and don't pay the use tax owed in their state. Now, likely that will continue under the fair tax. People will try to obtain things without paying the fair tax. My guess is that most shipping companies will have a policy that if they are asked to ship something from overseas to the U.S., they will ask to see the purchaser's resale permit. And of course, if it's shipped via regular mail, if you're buying Rubik's Cubes from a vendor in China, it just comes in a plain brown envelope, that will likely slip through. But that was it, that the fair tax would be collected by the customs people. And I assume, I've never had to deal with customs before, but if I'm an overseas shipper, and I'm sending something into the United States, then I, as the shipper, would have to pay the customs duties, which means I better have collected it from my customer before I try to send it to him. Is that right?
Well, I'm not sure if the shipper would have to pay. It probably depend on the arrangement and the customs rules. But I think, and especially for anything large, let's take the Volvo example. You're going to be paying the fair tax upon port entry.
Okay. All right. Well, I think that kind of brings up into a subject that you have researched fairly extensively. We've referred to your article a couple of times. It's published on fairtax.org about evasion of the fair tax versus evasion of the income tax. And since the little scenario my brother came up with was kind of can people use this to evade the fair tax? Was this a scenario? I'm interested in the methodology you use to arrive at your numbers as much as I am in the numbers themselves. So dig into that a bit, if you would.
Yeah. So when I did my fair tax evasion study, I before we go quantitative, just a very quick note on qualitative, because the qualitative aspects of fair tax versus income tax are very important as to the background of why the conclusions make sense. So qualitatively, if we think about it, the income, the sweat off our brow, it's what we earn by our labor, by our hard work. And there's a certain, right or wrong, there's a certain affinity we have with our income because we work so hard for it. And when you tax income, what we, in the accounting world, we have what's called the fraud triangle. When three things are present, fraud, intentional, inappropriate acts, defalcation, stealing, fraud, and it has intentionality as an aspect of it. The three things are opportunity, rationalization, or some people call it motivation, and then incentives or pressure. And if we think about the income tax qualitatively, all three of these aspects of the fraud triangle are present. You've got massive opportunity because it's kind of an on your honor, fill out your tax returns. You've got the rationalization and motivation because of what Adam Smith said in Wealth of Nations, that our income is so sacred to us because it's the fruit of our labor. And then the incentives and pressures are just like, listen, the more this tax rate keeps coming up, the more and more I'm going to be, especially with the opportunity there, the more and more I'm going to be motivated to not pay it. Plus, I'm seeing everyone else not pay it. My neighbor, this guy, the sole proprietor, the guy who, buys that awesome Navigator, and, it's a work expense, and they're evading a lot of taxes illegally. So you get the fraud triangle super, super concentrated with the income tax. Fair tax, let's think about it. I am not paying consumption tax up to the poverty level because I've got the prebate. And I really have a choice after that. And with consumption, I'm not as motivated, and I don't want to rationalize not paying as much because it's my own choice versus someone taking the fruit and the sweat off my brow. Now the opportunity goes way down. This is really the most important leg of this three-legged stool. If you knock out the leg of opportunity, as much as you're motivated, can rationalize, as much as you have incentives and pressure, if there's no opportunity, if the cash register's locked, you're not getting the cash out of it, right? So if you got out the opportunity, right now it takes two to tango with the fair tax. Go into Walmart, Amazon, you got to pay the fair tax. Good luck trying to negotiate your way out of that one, right? Now, again, the fringes, the lawn guy, maybe the Rubik's Cube from China. There might be, one-off situations because we have humanity, but the opportunity goes down tenfold. So we set the stage on qualitative aspects on the evasion study. Now let's go quantitative.
Okay.
So what I did is I looked at sales tax evasion studies in recent years from California and Washington, the only two I could find on sales tax evasion. And I extrapolated that. I took a weighted average of those Washington and California studies, and then I extrapolated that to a national fair tax sales tax system. And you know what we got when we look at a national fair tax system evasion annually versus our income tax? 95% less evasion. You'd still have some because we have humans, but right now it's about 800 billion, cresting very close to $1 trillion a year illegal evasion under the income tax based on PhD studies.
Right.
And under the fair tax, that's under 100 million. Like I can't remember, 50. Sorry,
I think your number was like 41.
41 billion, if I'm not mistaken, versus 800 billion. And, I just did simple math. It's a 95% reduction if we're under the fair tax. Now, and Bob, you got to ask yourself, the Treasury is going to collect everything it should and not leave 800 billion on the table. That's almost enough. Now, of course, the last year or two with COVID, we started spending like our hair's on fire. But up until COVID, we were running about $1 trillion deficit a year, adding $1 trillion to the debt each year. 800 billion, it's getting close to $1 trillion. That's enough to make that zero. Isn't that amazing?
That's pretty close to there's your balanced budget amendment. Just collect everything that's owed to you.
Right. And that's with some pretty ridiculous spending, by the way, too, I might add.
All right, so Andy, the answer to your question is on these kind of, when you're buying directly from foreign companies, your goods will be taxed at the customs level when they bring them into the United States. Jay, just out of interesting here, Karen Walby also weighed in on this. She said, I believe that some states get data from eBay and then contact the buyer to collect the tax. Now, I've never been contacted to pay the tax on any of my Rubik's Cubes. She does say, I also know the IRS gets data from eBay, which I thought was kind of interesting.
Interesting. Yeah. They're interesting. And, for the most part, when we buy something on eBay, Amazon, Wayfair, any of the online, sales, Walmart.com, you're paying your tax.
Yeah, because it used to be, it's not quite as prevalent as it used to be, that you could go online and buy something. Say, I could buy from a company in Colorado, and that company in Colorado would not be obligated to collect Florida state sales tax. So I'd go buy something from them and not have to pay the sales tax on it. You just scale that up to international thing. So yeah, there's probably some cases when you can get away with not paying the fair tax on a purchase that you buy directly from a foreign vendor. But again, with most of it having to go through customs, they'll still get most of it.
Yep, that's right. There'll always be a little cheating on the fringes, but again, 95% less under the fair tax. That's crazy.
Okay, now talking about online marketplaces, that segues right into what I want to talk about now. We are working on Mike Simmons, who's here in Florida, is a very talented web designer. I assume, have you heard of the FAIRtax Market Place? I imagine the National Board has been talking about that.
We have. I'm excited about that.
All right. Well, explain real quickly how it's going to work.
Well, as best I understand it, and I'm probably not the expert, but the way I understand it is it'll be a system where as we go about our purchases, and for purchases across the spectrum of consumer products, etc., we'll be able to help the AFFT and fairtax.org by a certain amount of the purchase going to the AFFT, and this sets up with volume, and if this marketplace is able to connect with vendors who we buy from a lot, it's worth it to the vendor because they get a group of people buying at volume, and so they get business. So and they're happy to give a little bit back, whether that's 5%, 10%, 20% to the AFFT. And we see this a lot with some of the credit card companies and airlines. And if you just make your purchase same as usual, but go through our website and you can earn credits and cash back and things like that. I think it's very similar the way I understand it.
Yeah, so the concept is that people who support the fair tax, if given the opportunity, would buy from businesses that support the fair tax rather from businesses that don't. And so what we're trying to set up here, a FAIRtax Marketplace, is just kind of like a storefront. You know, you can go to Amazon and you'll see, you know, all the kinds of stuff that you're looking for. And you'll see that some of the items, like the good number of the items that are offered for sale on Amazon, are actually offered by a third-party vendor. It is not Amazon itself that is selling you, you know, that Rubik's Cube or whatever it is that they want. And so a seller who has a presence on Amazon pays back a percentage of their sale to Amazon for the, you know, for the privilege of posting on their site and seeing all these customers. So obviously we're not going to be Amazon right out of the box, you know, where you can get anything and everything. But the first step we're trying to work with, and Mike says, you know, that we can go ahead and start asking businesses, you know, you've got to have the products available before people can buy them. But if we can get any businesses that want to advertise either products or services, and they support the fair tax, and they want a presence on this FAIRtax Marketplace, they can send an email to info@fairtaxmarketplace.com. And then once we get some vendors lined up, we'll say, hey, you can go buy your stuff that you would normally buy from Amazon and instead buy it from this vendor that supports the fair tax. And assuming the price would be somewhat, you know, competition would keep the prices somewhat level, I'd pay a little bit more to support a fair tax business. And so that's going to work. So if you know any business people, I would imagine in your line of work, you know quite a few number of business people. See if they'd be interested in listing themselves and their products and services on the FAIRtax Marketplace. Right now, there's really not much there to buy, but you can still go to FAIRtax Marketplace and look at it.
Yeah, it'll take some time to get the traction on this, but I'm excited. And you know, Ron mentions this a lot on your FAIRtax Power Radio. No one takes a paycheck. Even Steve Hayes, our president, will travel on his own dime quite a bit and talk to people in Washington and other places. But no one takes a paycheck in there. But there are a lot of fees. You know, even if you think about it, you do a FAIRtax event at the state fair in Florida, and you got to have liability insurance in case someone slips on your FAIRtax sign. And there's all these fees. So we sure appreciate anyone at the 1040 Club or donating at any amount each month. And this FAIRtax Marketplace will help tremendously. But, you know, and if we could ever get up the funds high enough, then we could really hit the airwaves with advertisements, which would really, really get the ball rolling.
Yeah, if we could get this going, then the contributions that the businesses make back to AFFT for the privilege of being on their website could work pretty well. And you hit on something that I want to get real quick: the liability insurance. If you have a fair tax event at a public event, you can get liability insurance at no cost to you through Jim Bennett.
Right.
I assume you knew that. Yeah. So
I do know that, Bob. And what Jim will tell you, just make sure you email him before the event so he can let the insurance carrier know, and then we're covered.
Yep, that's it. And it's at no cost to you. So if you've got you got an event coming up in 2 weeks, contact Jim, jim.bennett@fairtax.org, get that taken care of, and he can cover you at no charge to you. So that's pretty cool.
That's a good deal.
All right. Well, you've done a really good job substituting for Ron today. we got a few more minutes left, and what we usually in the last few minutes of the program, we go through our call to action, things that we like people to do. One, of course, is to go to AFFT, fairtax.org, and sign up for the 1040 Club. And you mentioned that a minute ago. How's that work?
You know, it's so simple. And you just go to the website and you can click donate or 1040 Club. And what it is, it's $10.40 a month to help with these administrative expenses and state registration fees and liability insurance. And it sure helps the organization. And, you know, maybe it's the price of a latte at Starbucks, but it's super, super helpful. And it's the lifeblood of continuing AFFT. And we sure appreciate it.
Yeah. People think everybody's a volunteer. What kind of expenses do they have?
Right.
So,
right.
But they maintain a pretty extensive database. And of course, there's always the internet service to keep FAIRtax.org going. You probably know a lot more than I do about some of the specifics of what they have to deal with.
Well, you bet. And then there's software for the accounting on the expenses, and then the annual audit, and tax filings, and all the things. It's a 501c4, so there's the administrative girth of dealing with an organization like that. Money coming in, money going out. The expenses aren't extensive because it is volunteer, to your point, but they are present because of all the different states of registration, and some of the expenses associated with that, and liability, and other stuff. So, and again, if we could get any kind of large corpus, we could hit the airwaves, and I think that would really help with the traction.
Yeah, I think it's pretty exciting what's happening at the state level. Georgia,
Yes.
Alabama, especially. So one thing you can do if you want to help get the fair tax passed on a national basis is to help get it passed in your state. So we're going to let you pressure the Colorado legislators out there to join Alabama and Georgia and get rid of your state income tax. And that's your famous first mover advantage. Whoever does that first is going to have a
Yes.
tremendous advantage in attracting businesses and population to your state.
Yeah, that's right. It's funny. I wrote an article for the Texas CPA Society magazine, and I actually got some interest from an old colleague who knows a Texas state senator there, and we actually talked to their economic aide about, even though Texas already doesn't have an income tax, it generated a conversation of, wow, can we maybe even get rid of the very cumbersome property taxes there that are administered in 500 different jurisdictions and 500 different office spaces and 500 different aerial photography and protest, and get rid of all that and just have everything be administered through the sales tax. So yeah, having a little bit more luck in Texas than Colorado, but we'll see.
I think one of the things that they were working on in Alabama and Georgia is how you would, some of the localities, counties, or even cities that would have their own sales tax, and how would you replace that with a statewide bill? That's under negotiation, but that does
Yeah.
not seem to be an insurmountable hurdle.
Agreed. I think it'll depend on if these states take away the income, corporate and individual, but also the property. When you get into property taxes, there's these silly nuances because, well, maybe these folks in Atlanta vacation out in this rural property and spend a lot of money there with sales taxes and have
Hmm.
second homes there, so they pay up the property taxes. But now, under a state fair tax, how would that rural county do? Because maybe their sales tax inflow would be a little bit less without the property tax. So you get into these nuances that you kind of have
Yeah.
to try and find solutions to.
Well, unfortunately, that's about all the time we've got for this edition of Fair Tax Power Radio. Thank everyone for watching and listening. I'm Bob Paxton, and thou art.
And I'm Jade Walle.
Okay, reminding you, as we always do, the fair tax is the only truly fair tax, and once you understand it,
You'll demand it.
Follow the FairTax Guys on social media and their own website, fairtaxguys.com, and check back